Hey guys, it's Will Rich. So oil and gas stocks are definitely going to be one of the biggest assets that you're going to want to watch during this new year in 2025. Part of the reason why is because when you look at oil and gas and Aramco, they had a lot of the oil production slow in the Middle East simply because they were anticipating more oil production in the US here in 2025 as a difference in the office in our presidential election. So that's going to impact things. We're going to go into it today. Hopefully you guys enjoy. Could rising US oil production and tariffs under the Trump administration potentially send shockwaves through the global energy market? Here's what you need to know. There has been a slowed Middle East production in oil since just before the elections, and anticipated tariffs and new policies that are going to impact oil and impact an increased U.S. oil output. So this is something we want to think about when we're looking at oil stocks. We got our Stockmate list, oil and petro. If you want to watch us trade live each day at Market Open, it's the second link down below to do so. That's Stockmate. So OPEC's, OPEC's influence and decisions definitely are going to impact. You can see, let's do OPEC oil production. Can kind of get an idea of what's happening. We go over here to the news. We can look at OPEC. Oil output falls in December on UAE and Iran, survey finds. We also saw that there was a Financial Times article, I believe, or it might have been Bloomberg. Let's see. Might have been Bloomberg. I believe you can see these OPEC delays oil production. It was starting to happen right before the elections, and there was concerns over future demand due to potential tariffs that we're going to see here in 2025. Now, you can see the markets are closed on Monday, January 20th. So we won't have our live trading session there at Market Open, but we're still going to be monitoring these oil prices very closely. See, Oil U has been having these consistent swings. You can look right here, November 4th. Let's see where it was, 2024. November 4th was right here. Okay, this is right when we started to see a swing around the elections, sold off, hitting that 200-day moving average, went down here, started to recover. This is tracking oil, and that Middle East focus on maintaining some of the price stability means they basically said if we're going to have tariffs on oil, then we're going to have to slow our production so that we don't have such a high volume of supply, so that countries are going to be able to take advantage of us and say, you have a huge supply of oil. We are not going to pay the same prices because you have so much. Or they're just going to have to get rid of their oil and they're going to mark down their oil prices, which is going to lead to lower profitability. So this strategic pivot that we're seeing in the Middle East with slowed oil production is also because of an impact of Trump's administration, basically not only adding more tariffs into oil production, but also the increase on U.S. oil production. I just recently drove through the Midwest. We saw, I don't know if it was Chevron, I don't know if it was Texaco. We got all these different oil stocks here, but there are all these different oil rigs that you can see that are pumping oil in the Midwest. When you're driving through what could be Nevada, when you're driving through Texas, or I was going through New Mexico and some of southern Colorado, and we saw that all of the oil pumps there were pumping like crazy. And this is right around the elections. Now, normally when I drive through there, which I've driven through there dozens of times, you don't see every single oil rig going like crazy, but all of them were going, and it's just showing that these policies that are anticipating is showing an increased U.S. production, making U.S. more self-sufficient, and that's going to put pressure on these Middle Eastern countries to find alternative buyers or diversify their revenue streams. And so the U.S. oil could see what would be more of a boom and a global impact here in the future. So let's take a look at some of the oil prices historically. Just kind of break down some of the recent price changes. We've seen a high of $87 down to what was here 21 cents. That was that crazy time in 2021 when oil prices went negative. And then you can see right here, starting to see a recovery. And there's this support line that's been holding fairly well right here, right around $27. And you can see that that was also a previous resistance right there. Okay, so the technicals are looking like this is something that's bouncing consistently. We start to see even this level right here, this previous resistance, start to make way, along with this level right here that it's currently at, where it could get rejected, but most likely we'd see it swing between these two levels, between that $24 and $50 a share. And this is ticker symbol OILU. A good way to think about these, this is kind of a higher leverage swinging oil correlated index fund, but OILU and OILD, this is the inverse of OILU. So basically, these are index funds that if oil is going up, you can think about it that way. Oil up, OILU is going to go up with oil production going up. And if oil values or the market industry is increasing in increasing in value, then OILD is gonna show oil down, right? Oil will go down in price, just specifically on this index fund. So there's been a lot of advances in the fracking, some shale production. We could see some data on U.S. oil exports and see kind of how this is impacting. You see crude, this is 1 week ago. Global crude exports dip as trade routes reshuffle again. So there could be loss of market share from some of those Middle Eastern companies to the U.S. producers. You can see Middle East oil exports to Europe fell 22% into 2024. And then U.S. boosts their global oil trade share to 9.5% with shale production. So loss of market share to the U.S. could be seen. Potential shifts in global oil prices just due to oversupply could happen as well. More likely not to happen because you already saw Aramco, a lot of the Middle Eastern. I was hoping to find that oil OPEC. I believe maybe it was Bloomberg slows production. And if we could find that legit article from back there a few months ago, I was hoping we could see it. But yeah, you can see, you can see the output slowing. But there was a really well-written article right before the elections that basically outlined that this would happen. And that's kind of the U.S. oil boom, right? It's going to have a global impact. The shift in oil flows is creating opportunistic alliances. You're going to see an increase in U.S. oil production. Oil is no longer flowing along the least cost curve, and first consequences is tight shipping, which raises freight prices and eventually cuts into refining margins. The U.S., with its surging shale production, has been a winner in the global oil trade. The country exports 4 million barrels a day, boosting its share to 9.5%, behind Saudi Arabia and Russia. 2025, suppliers will keep grappling with falling fuel demand in major consuming centers such as China. And you're definitely going to see, some long-term implications from this. If you think about the Middle East shifting focus to like alternative energy, or maybe not becoming the powerhouse per se, there still are, but just shifting away from some non-oil revenue, that's going to, I think global oil prices are about to get very volatile. We could see some big swings here in the near term. I'm expecting a swing potentially up here on OILU. You could take a look at some of these other companies. These are smaller cap. We could start with the larger cap like Chevron. It kind of even looks like, if you look at OILU recently and then look at how Chevron looks, it actually kind of looks similar. Get an oil SBR here, some SBR PBT. You got
British Petroleum as well, doing okay, but most likely going to see some volatility in the near term, and U.S. consumers might benefit from these changes. I would imagine that these changes in the near term could definitely make oil prices most likely a little bit cheaper, and also bring in some revenue to the US companies. And then there's going to be some opportunities here in the ETFs, opportunities in the US for these US oil companies. There's going to be a lot of growth probably in the US. There's been some slow. I had some nice photos of some of the Middle East oil production. There was some studies on seeing the slowed oil production that we got to take a look at. And I mean, you can see India's IOC buys Middle East African oil to replace Russian supply. Okay, so Russia is losing a little bit. Energy implications of escalating Middle East conflict. There is talk of a potential trade war. I mean, that's not out of question, given, some, like, if we see a big tariff hike, something like that, that's absolutely in the cards for what we could see in 2025. For months, oil markets not seem to be pricing in the prospect that Israel's multi-front battle against Iran and its regional proxies might disrupt global supplies. And you think about, like, the conflicts that are going over happening in the Middle East around Jordan or in Israel. There's gonna be some impact based on how much people are willing to fight, or how much it's gonna change if the U.S. ramps up oil production and oil becomes less valuable coming from the Middle East. So you got to think about that as well. Could definitely impact it. We'll see how these dynamics play out. If you're interested in some of these energy stocks or understanding the market dynamics, make sure to hit the subscribe. Do consider liking the video, and then go to, if you'd like to learn with me and trade with us live at Market Open, see if an opportunity presents itself, you can go to cash2assets.com/stockmate, STOCKMATE, or you can click the second link in the description down below to join us at Market Open on Tuesday. Again, we have the market closed Martin Luther King Day, and I look forward to seeing you there. Thank you guys so much for watching. We'll keep you guys updated on some of these smaller emerging oil tech companies as well, and also some of the larger cap movements that we see as things start to develop, tariffs start to get introduced in 2025. So if you want to stay up to date, again, make sure to subscribe. By hitting that like button, hit it, and I'll see you guys in the next video. Take care.